Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, on my series of The Truth About Taxes, I'm going to give you a couple examples. One was running almost a $2 trillion deficit over this last fiscal year from September to September. And the culprit of a lot of that deficit was over $1 trillion of that just servicing the interest on our debt. Folks, that's crazy. So regardless of who takes the White House, and I'm praying that that's going to be Trump, the reality is taxes are going to have to go up because the cost of living has just escalated like crazy. And as the cost of goods and services and everything continues to go higher, and these interest rates, unfortunately, with what the Fed just went berserko and raised 11 times, are now slowly catching up. Now they're going to be quickly catching up because many of us are now starting to transition to withdraw money from our retirement accounts. And we don't have any deductions. Well, I'm going to teach you this coming Tuesday at retirementprotected.com. That's retirementprotected.com. It's a complimentary log on to learn educational webinar where I'm going to teach you strategies around tax deductions and tax credits. And let me give you a really good example. There's an organization or a think tank called the Boston College Center for Retirement Research, headed by Miss Munnell. Mrs. Munnell is just now retiring, and she did an interview with the Wall Street Journal and talked about the biggest regrets that she had. And remember, the think tank for the Boston College Center for Retirement Research is to help prevent a retirement crisis. Well, she's working till age 82. She's an economist. She served under the Clinton Foundation and also was part of the Federal Reserve of Boston. But get this. She said, I regret that I nor my husband, we didn't get more moved over to Roth because now we have to start drawing out of these accounts and we're obviously going to get taxed pretty heavily. Folks, don't let that be you. You know, I think about clients that are still looking to save taxes this year, and there is still time. And for those of you, and on my series of The Truth About Taxes, I want to emphasize in this moment required minimum distributions. See, people don't realize the tax risk road they're traveling. So I want to give you a resource, okay? I'm going to be teaching strategies and concepts with a track record of measurable results to counter this, but I want you to see the tax risk road that you're on. Go to retirementtaxcalculator.com. That's retirementtaxcalculator.com. It's free, but I want you to plug in a realistic tax rate, a total of all your IRAs, 401ks, and then I want you to see over your lifetime how much tax you're exposed to, because depending on your age and the amount you've saved, and depending on the growth rate you get and how high taxes go, we run a very custom design of that for those that attend our webinar and want to look at more of a custom tax savings analysis. But this one's going to open your eyes up in general. It's usually about a 1-to-1 without raising the growth rate or raising the tax rates. So whatever you've saved will be the tax that you'll pay. Folks, don't let that be you. If you still want to take taxes this year, there's things that you can do, but you've got to hurry. So whether you're already drawing these RMDs or you're learning quickly about the risk of what you'll face when you have to start taking down distributions from your retirement, or the government starts forcing you out at required minimum distribution ages, some of you may be facing that first RMD this year. There's things you can do to counter it. There's proven solutions with a track record of measurable results. Imagine literally getting to zero. I talk about that on my radio program this weekend, right? How can you keep more in your pocket instead of having the IRS in your income and Uncle Sam in your assets? Let me teach you this Tuesday on how to remove your wealth from Washington at my webinar at retirementprotected.com. If you had a big income year, you want to do Roth conversion, maybe you already did Roth conversion, you have a big capital gain, a number of you have reached out and have learned one of our strategies I'll leave you with is the 4 times tax deduction. So 100,000 creates a 4 times or $400,000 deduction. That's helped offset an enormous amount of unnecessary capital gains, being able to do strategic Roth conversions where you're not adding more tax to your income because you're using a deduction to offset the conversion tax. All this through our strategic tax team of CPAs that support our clients on an optimized wealth plan that's written, it's comprehensible, and it's able to be followed, and you can still get things done this year. There also is one I'll leave you with tax credits while they're still available and they're in circulation that many of us, our family, a number of families included, have used to go back and get taxes. If you paid a lot of tax last year or the year before, there are solutions. I think of a CPA I'll leave you with that had a client that was facing almost a $500,000 tax bill on a federal level. It was actually able to use tax credits to basically get a discount by getting, obviously, the taxes back. So imagine removing taxes, getting your IRAs away from the IRS, and preventing the legislative retirement risk that's coming with the changing of the guard, potentially, of how hard with this deficit. Now remember, the deficit over $1 trillion just came from the interest alone, and that was after a record-breaking year of collected taxes at almost $5 trillion. Folks, the writing's on the wall. retirementprotected.com, retirementprotector.com, and learn the truth around your taxes and learn the tax risk road you're on and the reroutes that you can take.